What if I told you there's a tax strategy out there that's so powerful, it could save business owners an absolute fortune, even after a new law basically tried to make it obsolete? Well, it exists, and today we're going to break down exactly how this thing works.
All right, here's our game plan. We're going to start with the tax headache that kicked this whole thing off. Then we'll get into the super clever workaround that saved business owners a ton of cash. But then, plot twists, a new law changed everything. Or did it? You're going to want to stick around because we're going to uncover a hidden power that makes this whole strategy more important than ever.
Believe it or not, this all started with just one number, a single solitary change to the tax code that created a massive headache for business owners all across the country.
So you might remember this. Back in 2018, the Tax Cuts and Jobs Act put a cap on your deduction for state and local taxes, what everyone calls the SALT deduction. And that cap was just $10,000. I mean, that's everything. Your property taxes, your state income taxes, all crammed under one tiny little $10,000 limit. So you can imagine, right? For pretty much anyone with state and local taxes over 10 grand, especially in high tax states, this new cap meant a much bigger federal tax bill. And let me tell you, it really hit the owners of pass-through businesses the hardest.
But hey, where there's a tax problem, you can bet that some really smart, creative people are going to find a solution. And in this case, they came up with a truly brilliant workaround.
The states themselves actually came to the rescue with this clever idea called the Pass-Through Entity Tax, or PTET for short. The whole concept was super simple. Instead of you, the owner, paying your state income tax personally, your business could just choose to pay it for you.
And here is where the magic happens. When the business pays that tax, it's no longer considered a personal SALT payment that's stuck under that measly $10,000 cap. Nope. Instead, bam, it becomes a fully deductible business expense on the federal return. And the best part? No limit.
And listen, this wasn't some shady back alley loophole. The IRS gave it their official blessing, and oh man, it became a massive hit. 36 out of the 43 states that even have an income tax jumped on board to offer this to their business owners.
But you know how it goes. Just when everyone got comfortable with the new system, Congress decided to throw a major curveball with a new law, the One Big Beautiful Bill Act, or OBBB. And yeah, it changed the game all over again. Okay, so what OBBA did was it took that frustrating $10,000 SALT cap and it jacked it all the way up to $40,000 per household for a few years. That's a four-fold increase. A huge deal, right?
And of course, this immediately raised the big question on everyone's mind. I mean, if you can now deduct up to 40 grand in state and local taxes on your personal return, do you even need the PTET workaround anymore? Did this new law just make the whole thing obsolete?
While the answer for a whole lot of business owners is a loud, resounding yes. And it all comes down to a classic feature we see all the time in the tax code, income phase-outs. Okay, so here's the catch. That shiny new $40,000 cap, it's not for everybody. The moment your modified adjusted gross income, your MAGI, goes over $500,000, that big new cap starts to shrink. And if you make over $600,000, well, guess what? You are right back where you started, with the original $10,000 cap. So for these folks, the PTET strategy is just as crucial as it ever was.
But here's where it gets really interesting. Beyond just being a clever way to get around the SALT cap, the PTET has this hidden superpower. It can actually lower one of the single most important numbers on your entire tax return.
So by turning a personal tax payment into a business expense, this whole PTET strategy directly lowers your adjusted gross income, or AGI. Now, think of your AGI as like a master lever on your tax return. When you pull that lever down, even just a little bit, it can set off this amazing chain reaction of other powerful tax benefits.
For example, it can help you dodge the 3.8% net investment income tax. That's this nasty little surtax that hits things like capital gains and dividends for higher earners. A PTET could help you dip right under that income threshold and avoid the tax completely. It can also save you an absolute fortune on your Medicare premiums. So your premiums are based on your AGI from 2 years ago, and there are these really sharp income cliffs. If you go just $1 over the line, you could be on the hook for thousands more in premiums for the whole year. A PTET can be the safety net that keeps you from falling off that cliff. And it just keeps going. A lower AGI can also unlock the door to a whole host of other super valuable deductions and tax credits that would otherwise disappear as your income goes up. We're talking about everything from medical expenses to education credits and a whole lot more.
Oh, and for partners in a partnership, there's another fantastic bonus. Because the PTTE payment reduces the business's net income, it can also reduce the partner's self-employment income. And that can save them thousands more in those really hefty self-employment taxes. Now, PTETS are amazing, but they're not exactly a free lunch. There is one key trade-off that you really need to be aware of when you're running the numbers on this.
So here's how it works. The state tax paid by the business reduces its profit, right? Well, that profit figure is also what we call qualified business income, or QBI. And since a lot of pass-through owners get a 20% tax deduction based on that QBI number, paying a PTET will shrink that deduction just a little bit. So you always have to weigh all those incredible AGI benefits against the small reduction.
So to wrap this all up, what's the bottom line? Well, PTETs are far from dead. For high-income business owners, they're pretty much a must-have to get around that SALT cap. But for so many others, the real magic isn't even about the cap at all. It's about the incredible power of lowering your AGI to unlock this treasure chest of other tax savings. You know, the way all these things interact, the SALT cap, PTETs, your AGI, it's a really complex calculation. But as we've just seen, it's a calculation that could be well worth exploring with a pro to see what kind of amazing opportunities might be hiding in your own tax situation.
Thanks so much for joining us for this explainer. If you want to learn even more, definitely dig deeper into the source material.